A pretty wild week, ups and downs there on Wall Street. We all watched it happen, but ultimately at the end of the week, stocks closing off higher at the weekend. Does that help my next guest's argument to hit China even harder? O'Leary Ventures Chairman and Shark Tank investor Kevin O'Leary, a familiar face here with me now. Sir, thanks for giving us a little bit of your time here as we're kicking off Saturday morning. I want to get your thoughts. It was a wild week. And now it seems like there's a lot of negotiating going on with countries around the world. But we're playing pretty tough with China right now. Your thoughts?
Because China is not in the same group as the others. I mean, you can think about a circle of friendship with the EU, England, which is not part of the EU, Switzerland, and all the other countries mentioned, and of course Canada, Mexico. You can see that coming together with some kind of a reciprocal tariff, and I think we're well on the way there. But China's a completely different story. The problem with China is we have some real issues with them since 2000 when they came into the World Trade Organization. They've never complied by any of the rules. There are thousands of complaints registered at the WTO, and they've never been adjudicated, never been resolved. Now, when I do business in China, I can't use their court system, and yet they can use ours. They can actually sue me here with knockoff products that they stole the IP from. And so we've got a really imbalanced playing field. It's not a level playing field at all. Even worse than that, I'm just giving you a list of litany that has to be resolved in addition to trade tariffs. Trade tariffs are a sideshow in China. They get to use our capital markets, the New York Stock Exchange and the NASDAQ. They list companies that are not compliant with general accounting principles. You don't even get a real share. You get a shadow share, and they don't provide the right financial statements, and they're not compliant. And they're, by the law, they should be getting delisted. And I believe they will be soon because there's a new sheriff in town. Paul Atkins just got approval to run the SEC, and he's going to be a China hawk, I believe. So all of this stuff has to get resolved, and that's why my view is, why don't we just ratchet it up? Why mess around with these 25% a week increases? Just go to 400%. Shut down a complete trade with China and start squeezing them until they come to the table.
Yeah, we know that China's a big rule breaker, absolutely, on the global stage, particularly on finances. But at the same time, they also make a lot of things. We're buying a lot of things. A lot of those Chinese goods coming into America. There are businesses that are dependent on that trade to a certain extent, and consumers buy a lot of those goods. So what does that all mean as this continues to play out?
Well, you're 100% right. The largest consumer market on earth, almost 40%, is the United States of America. The U.S., 26.1% of world GDP. My point is they can't do without us. If they don't have the ability to sell this stuff you're talking about and make it in the factories and employ millions of people, those people become unemployed. And when you're let's call the Supreme Leader what he is. He can't keep his job. He doesn't have to face any votes. But if people can't eat and they're in the streets rioting, his job's over. Xi knows this. And so it's mutual destruction if it's a long-term situation, but it won't be long-term. You might as well come to the table, I say to Xi, but it's not just going to be on tariffs. You got to clean up your act with the WTO and access to your courts and access to your markets. If you want to play with the big boys in the G7, it's got to be reciprocal. And that's what's on the table. That's what I'm advocating for. You know, I want to point out for American entrepreneurship, thousands and even millions of businesses over the last 20 years, when you innovate in America and you get an investor and you create something unique and it's a hit product and it hits 5 million in sales, that's the moment it gets knocked off in China, because the Chinese never paid for any of the R&D. They don't have to recoup it. They flood the U.S. market with the knockoff and sometimes wipe out the original American company with the American jobs. There's nothing okay about that. And that's because we don't make them pay for IP theft. There's got to be a consequence. You can't keep doing that. And I'm done with it. And I'm just one of millions of investors who actually like the Chinese people. I want to do business in China. I want to sell there. But enough of this stealing the IP. I want a reciprocal playing field.
I want to get your reaction to this. This is what China has to say about it, specifically the Chinese embassy in the U.S. They say that even in the United States imposes these higher tariffs, so they're acknowledging this will happen. It would no longer make economic sense and ultimately go down as a joke in world economic history. They say that given it's already impossible for the Chinese market to accept U.S. imports at the current tariff level, if the United States imposes further tariffs on Chinese products, China will ignore it. They go on to say that China will take firm countermeasures. They're vowing to fight to the end, if you will. What do you make of that, the Customs Tariff Commission of the State Council?
Sounds like a beginning of a negotiation to me. I mean, it's just rhetoric. It's noise. But I can guarantee you right now within the Chinese Communist Party, there's people talking about this. There's, I'm sure, a little bit of dissension. This is not good for China. And when you think about the situation, the Chinese economy is much weaker than the American economy. They had a major real estate correction with billions of dollars of debt at stake, even trillions. They've got problems, and they may have to devalue their currency, which is a tax on Europe and the United States. It's not all good over there. And so I think further head squeezing is necessary. And I don't care. But my whole point is, be bombastic. Go to a crazy rate to signal that you're not going to mess around. I like 400. It kind of has a nice ring to it. And then just say, look, we're going to shut down trade, and all those people in your factories that you got to keep employed, they're probably getting a little nervous. And I think it's time for you to meet the president wherever. They can fly to any city, Riyadh, Geneva, come to Washington, whatever it is, and start these negotiations. And when that happens, the markets are going to stabilize. It's going to get worked out. So everybody should just chillax and wait for this to happen, because it's going to.
Be cool, as some people might say. Kevin O'Leary, thank you very, very much. Greatly appreciate it.
Hey everyone, I'm Emily Campagno. Catch me and my co-hosts Harris Faulkner and Kaylee McEnany on Outnumbered every weekday at 12 p.m. Eastern, or set your DVR. Also, don't forget to subscribe to the Fox News YouTube page for daily highlights.